was watching a video from like a year ago, and it had a business guru guy on there who was a mogul, real estate mogul, and it was laughable. It was so funny. A year ago, he was like giving advice that was so out of touch, so completely out of touch with reality that it was hilarious. He was like, yeah, in the last 10 years I've made record profits and I've done it by not having any like money. I don't have a rainy day fund. I don't keep any kind of, emergency fund. That's crazy. That's stupid. I tell everyone, don't do that. That's the dumbest thing you can do. Spend every dollar on buying more assets and go into debt getting more assets. Go into debt getting more education. Debt is such a wonderful thing. Interest rates are so low. If you look at big corporations, they don't keep emergency funds because they want the debt, because the debt is tax deductible, and the tax deduction is less than the interest rate. The interest rate is nothing, and you can have all these assets and raise your net worth. Net worth is such a stupid, invented thing to me, because a normal average everyday person is going to have like a negative financial worth if they are in debt. Say you've got a bunch of credit card debt or student loans or whatever. Any money you have coming in has to be not just more than the minimum payment, because the minimum payment's not actually gonna wear down your debt. The minimum payment might just be enough to cover the interest a month on the debt. You might be trying to pay off interest with the minimum payment, and you're not even actually paying off the full amount that the interest is on. So you're worth negative dollars and negative cents, because every single month this debt is looming over you and is a stressful thing that you're trying to get rid of so that you can actually have some sort of freedom in your life to do things. Now, there's some nuggets of truth in some of the stuff he was saying. For instance, acquiring assets that pay you. That's definitely a good thing to do. But corporations and major business guys have been enjoying super low interest and raising inflation, and they have been sitting back on their laurels, and now that the interest is up and debts are being called due and they can't afford and they're defaulting, and they're having deficits, and they're begging for investors, but investors don't want to keep losing money. Like, they're struggling. This guy has lost almost $1 billion. But his advice was stuff like, oh yeah, I've got all these real estate properties and investors. Oh yeah, all the investors keep giving me more and more of their money, and I just pay them every month a little check, and they're happy with just their little check, and you can totally do that too. Just get your neighbors or your friends or your family to start giving you some money. Start whatever business you want and just keep taking their money and give them little checkbacks every month. And I'm just like, wow. First of all, whose friends and family and neighbors have a ton of money for you to invest in a business that you haven't fully fleshed out and planned? Secondly, he's talking like you should just go for real estate. Well, even he, a year ago, said, oh yeah, 40% of all housing is now owned by corporations. He's like, yeah, and it forces the value of it up. Oh, our assets are worth so much now. It's amazing. And normal people, they're not even going to be able to buy a house. Soon it's going to be 90%. I look forward to the days it'll be 90%. That's what he said. And it's like, that's terrible. He's so far completely removed from the housing struggles of normal people that he thinks it's a good thing. Because all he cares about is if it looks like his net worth is going up. That's the only thing he cares about. Because even if he gets into dire straits and he just can't with his business anymore, he can sell it off to Blackstone, get enough money from that he can retire for the rest of his life, and call it good. And people, actual real people, just keep suffering. He also was super big on, oh yeah, cryptocurrency is the future. I've got like 6 million put into FTX on Bitcoins. I was just like, okay. That's that was a year ago. We all if you don't know what happened with FTX, Google it. The point is it was completely laughable, because here's this guy who's, you know, making hundreds of millions a year, making like 30 mil a month, and he thinks that that's never ending. So he constantly puts all that money back into other stuff. He doesn't keep any of his income. He flat out said, I never ever keep any of my income. Every single year, everything I've earned, if I have anything left, I immediately go spend it. I don't want to have anything in my bank account. I've seen a lot of people who measure things by the last 10 years, and the last 10 years were a time of record profit for people who were investors, for major, large corporations who could afford a lot of assets and afford to go into a lot of debt. A major record profit time for banks, who were allowed to loan out 9 times per deposit. So if you deposited $100 into a checking account, they could then make a loan of $900 legally. Like, the government allowed that because the government wanted banks to give out loans so that people could get mortgages and have houses, have housing. It's really tragic how much the last 10 years have really hurt the bottom half of people in the country, and just by extreme margins made profits for the top half of people in the country. But the last 10 years were not quote-unquote normal to all of the time before that. The way that the government tried to help with stimulating the economy only started around the dot-com thing. So in actuality, since 2008 is the only time that the government's even been, you know, having the Federal Reserve treat the economy in the way that it has treated it for the last 10 years. All of American history before that, it wasn't that way. And it couldn't last forever. But a lot of corporate people really, really just had it in their heads that this is just going to keep going on, and I'm just going to keep having my net worth go up. And to me, their net worth is just absolutely the most fake, made up number, because it's not including, it's saying here's the value of all their assets. But if they don't fully 100% own those assets, if they have a ton of debt, the debt should be counted against. The interest on the debt should be counted against. The, you know, fact that they get out of paying taxes and that they, you know, don't have to do that at all legally by using legal methods, the system just needs to change. But there's a lot of things about their net worth that are just outright inflated. It's an exaggeration. And they just like it because the number looks bigger and bigger and bigger. But the number can't get bigger and bigger and bigger forever. The world does not have an infinite amount of resources on this planet. It has finite limitations. You cannot infinitely grow in a finite world. And they have the business model of it always has to be growing. And that means whatever it takes. And they enjoy the debt and they enjoy the risk. But the risk has been way, way too high because interest rates have been they've been too tiny. It's so funny watching, you know, someone who's supposed to be a mogul and who's supposed to be a guru of finance and business and everything else talking about, oh yeah, I get every investor to invest and then I just send them little checks every month and they're content with that. When times are rough, all those investors, they want their money. They want out. They are not trusting that everything's going to be secure. And, I've seen that a lot. You can't just say that forever this is going to be profitable. So if you listen to somebody and you're like, oh yeah, I'm going to keep myself or my business at like 0 and I'm not going to have any kind of emergency fund and I'm gonna go into a ton of debt, and debt is great, debt is tax deductible for my business, whatever, take that advice with a grain of salt, because that is based on a decade of interest rates being on just like record lows and the Federal Reserve trying to stimulate the economy. That is not based on all of history. If someone says to you, oh yeah, look at this, whatever, for the last 10 years, I would highly suggest go look further back than just 10 years. There are some, for instance, stocks, some, mutual funds and index funds that, go back further than 10 years and look at them during a more normal time. Look at them as far back as you can. Some stocks go back more than 50 years. Go look. Go see. Because in reality, the corporations or the businesses, the stocks that have weathered through when money wasn't easy for them to have because interest rates were low, are going to be a little more reliable than all these businesses that were starting up when interest rates were low. And you might not be able to go back further than 10 years for some, like, good ETFs and stuff like that. That's understandable. It was a newer concept. But if you can go back more than 10 years, if you can go back past .com and see how they handled stuff, do it. Because the last 10 years are not actually the norm or how, the Federal Reserve treats loans and debt and interest and inflation. The last, few months, there's been a lot of tightening of the belt and corporations did not set themselves up to do that very well. And so there's been a lot of layoffs, and they can't afford to pay their loans, so they do what they can to drag that out. And for instance, a lot of companies, especially in the tech industry, they've laid off a bunch of people, but they're still showing hiring. And the reason that is they've got a freeze on hiring, technically, but they have to keep hiring technically, or else they have to start paying back PPP loans from during COVID. And they can't afford to pay back loans. So they have to keep hiring even though they can't afford the cost of having the employees. A lot of the record profits or places that are still growing, you'll see a caveat next to that of, but they cut expenses. And part of their growth was because of cutting expenses. Now, some places that's not as true. For instance, Berkshire Hathaway, doing super well, but I mean, why wouldn't they be? They're buying stocks on sale, and that's what they love to do. They're very happy there. But like tech industry companies and companies that were focused solely on growth stock can be really great because it can have better returns than, say, an index fund or maybe a dividend stock. Because they're paying out a dividend, they grow by smaller increments. And so sometimes a growth stock seems like a better plan. But take it with a grain of salt. It's not a 100% guarantee, because growth means pushing ourselves to the boundary and not having any kind of emergency fund. Growth means spend, get loans. Growth means if something bad happens, we're going to have to lay off a lot of people, because we can't actually afford ourselves. Our net worth is an inflated number. It's not accurately based on all the numbers. If you run the math, if you crunch the numbers, the real and true value for things becomes more apparent. And it's really important to know that. It's really important to understand that. And it's really important that if you can to avoid listening to moguls talking like that guy was talking a year ago, because he's changed his tune just a little bit now. but but I don't know what else to say. It's just laughable.